Hello and welcome to Trading the Trend. My name is James Boyd. We welcome all of you here today as we talk about what trends are you riding. This is an important question because you probably have financial goals and you might say, what trends could I maybe try to ride? Now, in our class, we talk about mainly about uptrends. Okay, that's the foundation. That does not mean sometimes there might be sideways trends and you might do maybe a different type of strategy or maybe playing some downtrends. We haven't seen a whole lot of downtrends lately, so a lot of our examples are like neutral to bullish, okay? Now, that's not a bad idea because primarily the market over time tends to be more bullish. Not always, okay, but tends to be. Now, remember, you can follow Brent or myself on X. There's my handle at JamesBoydCS. We do also post educational examples there as well. I'd like to welcome JP, WW, GH, Lena, GT, Billy Stewart, Greg, and many others. Welcome to all. I'm already hyped up as well. So, yeah, every day, I'll just say every day is a present opportunity, right? So just real quick as we get started, I want to just do a quick, And Brent, if you wouldn't mind posting there, there it is, his handle as well. Now, just real quick as we get started, remember our examples are stocks and options based. And we're going to show kind of a little variety there. So some of you might say, I don't even trade options. That doesn't necessarily mean you can't learn something. So I will kind of make sure we do both examples, stocks and options. And I also might kind of bring up why might the investor choose an option maybe over a stock, and kind of talk about that. Now remember, when we talk about options, options carry a high level of risk and are not suitable for all investors. When we talk about examples, the information we bring up, it's done for general informational purposes only. It's not a recommendation. Our examples, what we're going to do is we're going to put them in a paper money account, and we're going to learn really kind of how do you ride the trend, how do you pick certain strategies and practice those, and we'll do those together in a paper money account. Now also remember that investing involves risk, including loss of principal. And also remember when we talk about doing, let's say, covered calls or let's say cash secured puts, those are short options. And when we talk about the short options, we're talking about American style options, and those can be assigned anytime prior to expiration. So if we had a covered call, someone could take the shares prior to expiration. If someone actually had a short put, they could be assigned those shares prior to expiration. You should know that and kind of what that outcome could actually be. What are some of the pros and cons of that scenario? And how might the investor handle that? Now, today, I want to kind of have more of an advanced discussion. Not that the strategies that we talk about or anything we talk about is so complicated, but I really kind of want to go at a faster pace. I think a lot of times when we actually teach something, kind of maybe nervous about maybe teaching, where everyone, I think here I just want to go at a faster pace. And I want to kind of do this. I want to imagine that we've all been investing for 20 years, hypothetically. And we were just kind of getting together and we were talking about some things as investing friends. That's how I want to kind of do this class here today. So now I am going to be mindful of the chats. So if there are some questions that get brought up, then I'm going to dial back. Okay. Now quickly, let's kind of fire through it. Again, let's imagine we all have a kind of experience and we're just talking. Okay. So quickly, a couple of things that I want to pull up. Just want to kind of take a quick look at the SPX. Now, this trend that we've actually been talking about, right? The last couple of days, we actually had the moving averages go green again. We had the green shading in the last 2 days. Today, we actually fired again to a brand new brand new high here today. Now, one of the questions I want to kind of throw out here is why stocks? Okay, why are people buying stocks? Okay, so I want you to kind of think about as people. We could, for example, we could just put our money in cash. And this might be for some, maybe like a CD. Let's say it's a fixed income product, whatever. And I'm even going to say right here that let's say they tie up their money for a year and they might get 4%. Now, if you look at the US dollar, okay, now that's another kind of cash. If they actually look at the US dollar, is that US dollar going up or down relative to other currencies like the euro, British pound, Swiss franc, Canadian dollar, Australian dollar, and so on? Is it going up or down? And I think a lot of us would actually say, James, the US dollar has actually been declining in value. Okay. So if you actually went right now and said, I'm going to Europe, I'm going to take a vacation, you're going to have to pony up more US dollars for that €1. Okay. Now, if you actually said, heck with that, I'm not going to put my money in cash. I'm not going to put my money in the US dollar. We also kind of need to kind of think about, let's say, inflation. Now, inflation we know is not dead. I posted a picture yesterday morning or midday really about buying a sack of chips. And I should say I really bought a sack where there was about a ½ inch of chips. Now, it was a great diet program, okay? Really, it's hard to actually go over your calorie intake when there's hardly anything in there. But I bought a plastic sack, okay? Now, if you take a look at this inflation, let's say inflation is 2%. So if we take a look at this, if someone gets a cash return of, let's say, 4%, but inflation is eating away those gains by 2%, right here, there's only a 2% spread. Now, I don't know how much money you have, but you better have a lot of stinking capital if you think you're going to retire on 2%, okay? I mean, you better have millions of dollars and your lifestyle, you live on rice and beans and peanut butter and jelly sandwiches, okay? Not many people, unless they're just saving a ton of money, can retire on real returns of 2%. Now, that kind of begs the question. So when we actually take a look at these other asset classes like stocks, there's been some trends that have actually been interesting. Now, the risky thing about stocks is, heck, we don't know if they're going to go up or down. But if there's some opportunities of, can we actually try to make a higher percentage? So there's not guaranteed cash flows, right? The investor puts themselves at risk of what those trends are. But they're thinking, hey, I think I might potentially, maybe, perhaps, however you want to say it, I think I could do better, the investor says, than maybe having real returns of 2%. Okay. Now, if we actually looked at, let's say, commodities. So when I say actually commodities, why are commodities actually going up? Well, there's another asset class, right? We could actually say gold, we could actually say silver, and so on. Are there opportunities in that gold and silver? Now, don't even say lean hogs, don't say actually feeder cattle, don't say live cattle, whatever. Commodities is not just gold and silver. Surely we know that, okay? But there has been some opportunity. Now remember, if people say, look, cash return of 4% nominal, less inflation 2%, actual return 2%-ish, okay? People might say look, I think there's some trends there, and they might say, look, I might want to allocate some capital to that space. The last thing I'm going to kind of bring up is, what about real estate, RE? Now remember, real estate is heavily dependent upon jobs. The jobs actually influence the consumer confidence. The consumer confidence influences what the rates are, okay? I'm going to say interest rates. We've actually been dealing with the higher the interest rates, the lower the buying power, right? And that's what we've been dealing with if you didn't buy your house with cash or close to cash. So the biggest thing is, why stocks? Now, I don't know what's left, okay? I'm not going to bring up the other asset class we talked about on Fridays, but really, if you kind of look at this, some investors might say, James, if we're talking about asset classes, stocks is like staring me in the face, even if I'm not looking. And commodities is staring me in the face, even though I might not know anything about them. So now, we're not saying that some people don't want to do some cash or some part of the portfolio, but you're going to see why stock markets are going up. Because when we say real estate, a little tougher, okay? Got some headwinds. What jobs, we should say? Consumer confidence, we know, has been in the garbage can, okay? And we know the interest rates have actually been high, which actually pushes the affordability down and so on. Do you now understand, when we actually take a look at, let's say, the SPX, why is the SPX going up? It's kind of an odd question if we think about asset classes and are there some other areas that might benefit in this type of environment? Now, if we take a quick look at the NDX, Fast Fire, that also was a brand new high. Give it to us, like that. Okay, now, if you take it, actually look at, let's say, the Dow Jones, I don't know what, now, today's candle was a spinning top. That's funny. No, it was a Harami. No, that's even not, that's also funny as well. Today's candle is a, maybe a piercing line. All wrong. Today's candle gapped to the upside and then just took out any of these prior highs. Now, if we close here, this would actually be the highest close we actually had here on the Dow Jones. Now, also when we kind of take a look at kind of just real quick, these other areas. I'll bring up gold just real quick. Gold kind of huddling here. We've actually had, and this is just in the last, 3 weeks? Since the last time we had a moving average crossover, which is a foundational, basic approach. Now, that doesn't necessarily mean it can't work. From that crossover to where we are now, which is getting across, in the last 14 trading days, about 3 weeks, there's been a 9% surge. That's how it's felt if you were in it, okay? 9% surge in gold. So if some of those areas, the asset classes weren't that interesting, now we understand why people in countries and governments plowing capital into that space. Now, if we take a look at silver, we'd see something maybe a little smidge different. Maybe instead of maybe kind of pulling back a little bit, silver trying to kind of still maybe make a higher low with a new base of, let's say, $41-ish, okay? So those two are what we'll kind of bring up in terms of, let's say, looking at commodities. We've said before, oil has not been that strong. Natural gas hasn't been that strong. Even gasoline doesn't even look that strong. Okay, a whole lot of sideways. Those are not where the trends are. When we take a look at just real quick, the sectors. When you look at the sectors, now remember, when you look at the stocks, we said it was Micron that was actually leading the charts. Today, we actually saw Micron. You thought we could have said yesterday it was at a high and it was too high. Well, today it even shot higher than that. Now, it's not just, for example, MU. We are also seeing some of these other stocks get a push as well. LRCX also had a monster push. Guys and gals, these are not stocks that are buried into some, I don't know, how did you find these? Because if we could use a basic heat map, they were right there. Okay. Now remember, why does someone watch the sector? Because the sector is tipping us off what might be going up, which batch of stocks. Now, I will say this. When you look at, let's say, NVIDIA, we will pull this up in terms of just a sec. So we got the stocks going up, Micron going up, LRCX going up, things like that. We got to now ask the question, could NVIDIA get dragged up as well? Any takers on that? So in other words, sometimes you can get something that's been lagging that starts to maybe kind of fall more in line with the group. That doesn't guarantee it's going to go up, but that's the thought. We're going to kind of talk about playing the example of NVIDIA here in just a moment, okay? Now, I also want to kind of point out just briefly, when you look at the IXY discretionaries, now remember, we've said for weeks on end, if there's not taxes on Social Security, $1,000, let's hypothetically say if someone didn't have to pay taxes on Social Security, let's say the difference was $1,000 a month. $1,000 a month, next month goes by, $1,000, next month after that, $1,000, next month after that, $1,000 next month after that, $1,000 after that, $1,000. And so what do people do if they don't have to pay taxes on Social Security? What do they do? And we kind of said before that could that consumer discretionary-ish area benefit from that potential tailwind that some might have? Okay? And I'm telling you, I don't think that's really sunk into the cortex that $1,000 hypothetically, it could be less, could be more, could not be something at all. But if that extra money does come to those people, what do they do with it? Consumer discretionaries would probably really be the focus. And it's had a decent trend. Now, the one we actually said that we're going to keep an eye on, we have not said this for a long time, is really healthcare. Now, on Monday, we caught, because of the heat map, United Healthcare. Now, we said if United Healthcare is going up, United Healthcare represents a big chunk of actually the IXV, the IXV sector. Today, getting a little stronger push. We saw AbbVie actually get a little, well, that's been the strongest stock in the area, probably. That has led to the upside, but then the UNH, where's it gone? It's gone up a little bit more. And again, it goes back to the teaching. You break a level resistance, you try to fill in the gap. Now, if I had $1 for every time someone said, I missed the entry, I'm too late, things like that, why is someone too late? Because they're not doing the due diligence daily. And don't tell me it takes that long. Because we know if we just looked at the list of the index, sector, heat map, we can get an idea of where these actually pushes are coming from. And you can too. And that's what we do all the time. Okay. That does not mean the trades are always going to be profitable, as you will see. But the thing is, we can at least see them for ourselves. I do want to kind of point out the financials here. Still not looking really that weak. Stocks like Goldman Sachs, stocks like Citi, finally getting a push to the right-hand side. Stocks like JP Morgan, almost hitting a brand new high. And you're also going to see in there, you are going to see stocks like Morgan Stanley and Bank of America. Okay, these are all kind of these bigger names. If these are actually doing well, these companies kind of helping provide liquidity to consumers, to businesses, and so on. These stocks actually hitting a high. Not necessarily a bad sign. Okay. Now, so kind of things to point out here. When if we go back to this diagram, why are stocks going up? We're not saying that other investors aren't trading cash-based products. Okay. Many are using that as a portfolio allocation tool. Fine. However, the higher the inflation is, and if that rate is, for example, fixed, if that inflation year over year goes 3%, then that real return is not 2%, it's only 1%. So when people feel like inflation is sticky or it's kind of going up, CPI, PPI, the whole 9 yards, that rate of return, nominal return, gets eroded to where, hey, I feel good that the number went up. You got to remember, the number has to go up because it's inflation, okay? And if you take a look at this is why investors have kind of said, look, they might have to have a bigger allocation to stocks, commodities, things like that. They might have a bigger spread, okay, or a bigger return than the actual inflation. This is why they're going to those areas. Now, outside that, they're probably playing the technical analysis. Now, what I want to do just real quick is I want to bring up a couple stocks, and let's fast fire. Now, if we take a look at this, now I want to kind of answer that question because that's been on the kind of some of the surveys that you filled out. I don't understand why the market's going up. Well, number one is technically, why is the market going up? Because there's uptrends. But if we kind of sat back and said, what do investors have to pick from? And that's what we just went over. And if they don't like those returns or potential real returns of 1% to 2%, et cetera, okay, or close to there, and they think they actually might need bigger returns, they might have a bigger allocation of those other asset classes. Now, the one thing I want to kind of point out here just real quick is we always kind of talk about or try to bring up, what are some examples of selling? So we got a stock Delta, 59 shares. And you're going to notice that right here on the 10-20 period moving average, you're going to see that both of the moving averages have gone red. What does that tell us? Well, it tells us we lost some momentum or losing it. They got a negative trend. Now, let's kind of talk about selling. There's buying and there's selling. Now, here's the deal. We want to look at this chart and kind of ask ourselves, does this look like a bullish entry? Now, if we looked at this stock, we had a target at 65-ish. Excuse me, what is that? Yeah, 65-ish, had 59 shares. And it went up about to 64. So this fell short of that. Now, what you're now going to notice is if someone says, look, I want to sell based on the moving averages being red and the red shading. Today's an example of that. Option number two is that the investor said, look, I'm going to try to ride this out, but I want to, for example, move up my stop underneath this low. So in other words, if we take out that support, we fall back down to where that low is. What you're now going to see in this case is just setting the stop underneath that. Now, what I'm going to do in this example is we're going to manually just going to go in and sell it. So how do you sell it? Okay. Now, why might the investor sell it? Well, if this stock is just sitting here and it's taking up some of the capital in the portfolio, the investor might say, look, I'd rather put my capital in other areas that are not just sitting sideways and try to get something or invest in something that's going up. Now, some of the trades are going to be profitable a lot, a little bit. Some are going to be pretty much neutral-ish. If we went back and looked at this when this trade was higher, it was like $250 higher than where it is now, like gains. But when the stock pulled back and sat down, it only has $49. So this is not like, wow, look at the profitability on this. It's pretty much getting the capital back, and it's pretty much just taking 49 bucks and maybe buying a 20-ounce soda, okay? Now, if I right click on this, create closing order, we're mainly gonna go in and sell. Now, let me repeat this. Why is that paid money account selling? Well, remember in our examples, we're buying when those moving averages are green. Here, we're selling when the moving averages are red. Now, I don't know about who you have in your life or who you have in your area. There's a lot of people that struggle with making decisions, okay? So we want to be kind of just disciplined to like, what is the exit? So if we said the entries are going to be green moving averages, exits red moving averages, we are. So can the investor execute that methodology, that practice in the paid money account? We're going to go ahead and say sell that, confirm send, and I'm just going to double check what's that mid price, 60.08. Now just because we send the order doesn't mean it's going to fill. We got to get a fill. So if I now go ahead and say send that order, let's see if we get a fill. Now, if we said 60.09, which is closer to the ask price, it might not fill. I need the ask price to go up a little bit higher so we have a better chance to fill, okay? So that is an example of one right now that's really showing that kind of low weakness. Now, the other one that we actually kind of have in this example is Airbnb, okay? When you look at Airbnb, and I want to close this up, you're going to see that what type of trend do we have? It's in trend one. What does that tell us? Price below both moving averages. How long has the moving averages been red? Well, they are red. Confirm that. Script's not guaranteed for accuracy or timing, but they've been red for the last 7-8 days. What does that really mean? What type of position is this? This is a short put position. Sold to 125. Now with sold puts, you can get the stock to go down somewhat, but the thing is, if it really starts going down, this position can morph into shares of stock. Now, if we pull up Airbnb and say, let's kind of see what this looks like, does the investor want to own stocks where the moving averages are red? Now, if I were to ask you a question, where was the exit if we're talking about selling on red moving averages? Answer, it was right here. Answer, that was on 9.2, by the way. Answer, it was actually on 9.3. So what you're now going to notice is as that stock drop down, you can see it. The biggest thing is the puts have become more expensive to buy back, thus actually eating away the profits. Okay, now we go back to this. We're now running out of time. So on a short put, what's one of the risks? We know one of the risks is if you're short the put, especially when you start going inside 10 days expiration, the bid and ask spreads of those options become a little wider, less liquidity. We also see that we could have a potential chance of assignment. On a short put, that means what? That means we could be buying the shares at 125. Now, just because the stock is below the 125 doesn't mean we're going to get assigned. But the closer we go to expiration, the chances of assignment could potentially increase. Now, again, this is another example where, hey, I was more profitable. I saw the exit a couple days ago. I stood there like deer in the headlights, didn't do anything. I wanted to see what was going to happen. Well, all we saw was just more of the same. Okay? So the red lines on the moving averages, red shading was going, alarm bells. So what the investors trying to do is they're trying to be in the green shading. When you get the red shading, it's what I call the house of pain. Pain. Now, I don't know about you, but sometimes I can handle a lot of pain. That is not the goal, okay? This is not investing survivor, okay? So the biggest actually thing is when it's red, we don't know how low it can go. The investor is trying to protect any unrealized gains or losses, any unrealized gains, and they're trying to protect their capital and or limit the losses. The other thing about this trade is we're just flat out of time. We're going to right click on this, create closing order, sell. Now, the reason why I brought this up is people asked me on the survey, could you go over examples of exits? I just did, okay? And so we're going to buy this back. Now, again, this is another example where not all trades are going to be unbelievable, okay? Whopping $17.50 less commission. If we come out of this, it's going to be a whopping $15-ish, probably $16. So this is a pretty good example where sometimes the investor has to realize I just don't have the trend at my back, okay? So now what we're going to see in this case is we're trying to buy that option back for how much? 315. Now, the one thing we want to kind of point out is I did not see that order fill. Okay, check. Delta did fill, fine. And what we want to just verify, does Airbnb fill? We're going to give it 2-3 minutes, and if it fills, there you go. But we just want to make sure that that does fill, okay? Now, this is very important, okay? What you're trying to do is you're trying to be disciplined to, like, what are the entries, what are the exits? I want to go to, for example, some examples of potential entries. Now, I want to go back to just real quick, and I want to look at, let's say, something like, I'm going to pick one, and I'm going to go back to, let's pick the example. I'm going to go back to, oh, heck, I'm going to pick this one, Hood, okay? Now, if we take a look at this, Robinhood, okay, ticker Hood, you're going to kind of see that this has an interesting pattern to it. What pattern do you think I'm referencing? Okay, now Hood joined or is joining the S&P 500. Now, what you're now going to notice is we had a prior high, and those moving average predominantly, especially the 20-period moving average, was red. The 20-period moving average is red. The trend in that moment of time, short term, is down. Okay, now zoom in on the last couple of days. Why are we bringing this up? Well, you probably noticed on the 8th of September, we actually saw, for example, the moving averages cross back up on the news, okay? And on that, you're going to see a little Cahole dot, and you're going to see a little hanging man / hammer, okay, right near that potential old resistance, new potential support area. Red candle above moving averages do not deter the bullish investor. Those red candles could just be sometimes people selling and taking some profit, lack of buyers for the day, and so on. But the red candle does not mean bearish as long as it's above the what? The moving averages. Now, today we're kind of pushing back to the upside. The pattern that we're really referencing is kind of your classic V pattern. Now, if you take a quick look at this, what you're now going to notice is kind of a little down move, right? And a little right-hand side. Now, this is a little unusual where news causes the gap. I mean, is that a bad thing? Okay, is every move not going to be caused by news? Well, maybe not, okay? But that little gap was it joining the S&P 500, okay? Now, the biggest actually thing is there's kind of some fundamental things happening here as well. When we go back to analyze for just a second, when we actually look at the annual numbers, really if we're talking about sales per share, they were pretty much down 21, 22, 23, a little bit better, but then 24 stronger-ish, pretty much match where they were in 2021. Now, what you're going to notice is what the difference is before when they actually got that number, they were actually still negative. Here, what you're going to see is that number of just 326 on the sales per share, it's actually positive, okay? So it's kind of interesting to kind of note this. Stock's kind of in a different situation here, and we're now questioning, might there be some opportunities? Now, let's say the investor said, James, I want to go back to this kind of where this really broke out. Now, what some technicians will do is they'll say, look, I think actually the stock could stay above the 116. They might decide to sell something below that area. I'm also going to really mark the 110. And so they might say, look, I think this area here, 116, here, 110, I think we could actually stay above there. The investor says, not me, I don't say anything. Now, the biggest actually thing is when you watch this, they might come back to the trade tab and say, look, there could be a little speculation. And we know speculation is a 4-letter word. We never say that word out loud. The door's closed. And what you're now going to notice is there's the implied volatility is a little higher. Now, what does that tell us? There's an expectation of bigger movement up and down. Now, if we take a look at this, we're going to go to 17 October expiration. Now, remember, the bigger the implied or the higher the implied volatility, the bigger the premiums. The bigger the premiums, okay, the lower the break evens, okay, if we're talking about selling puts. Now, if we take a look at this, let's say the investor said, you know, James, I want to sell the put. And I want to sell that put maybe at the 110 strike price. So let's go back to the chart. If you said, show me that again. The 110 is where it gapped up from. Now, the lower the strike the investor sells, there's a greater chance of the stock to be above that strike, less chance to be below. But there's still a chance it could be below. Don't hear what you want to hear. Hear what I fully said. Now, when we look at actually that delta is saying 27% chance we could be below that strike by a penny. We also know that that 27 is the first dollar move up or down on the stock. Stock goes up or down $1, the option moves by theoretically 27 cents. So now what we're going to do is we're going to sell the 110, and we're going to, in this case, do a wide vertical. Now, this is not your typical vertical. When we sell the put like we're doing, and then we buy a put below, the investor is really doing more of what we call a cash secured put, but it has downside protection. Now, I don't care. Here's the thing. There's people that know a lot about a lot of strategies. And it's not what you know about, it's what are you trading in the paper money account. So let's say the investor sells the 110 and then buys the 90. Now, when you do that, it does lower the credit. Why? Well, because you're buying the 90. By buying the 90, we're creating a max loss. By buying the 90, it's actually decreasing how much capital we're actually tying up in the trade. Hence, that's why we're doing that in this account. Confirm send. Here it is. Okay, so trade number one, we're going to look and see could Hood get a little push here to the upside. Notice on this trade that whenever you have the max profit, max loss like this, given a short wide put vertical or also a cash secure put with downside protection, it's probability based. So that's why the max profit is less than the max loss. Okay. Now let's go ahead and send that. So trade number one, there you go. Now also I want to go back to just real quick. There was a comment from Debbie. Debbie, where are you? There was a comment on GLW. Now, I do know about this company. My friend, so I went to high school in Ithaca, New York. My good friend, he works for Corning, and he's worked for them for probably 20 years, okay? And so I've watched this company over time. Debbie mentioned it in the chat, and it kind of is interesting where we don't hear this all the time, but I want to kind of pull this up, and I think it is worth noting, a lot of times when you think of Corning, you kind of think of like shingles. I don't know why, but they do like a lot more than that. Optical fibers, cables, hardware and equipment products. You're going to also see fiber optic again, optical components, couplers, right? They're not just doing shingles, okay? They're semiconductor, what did you say? Semiconductor equipment optics, okay? So this is where it kind of makes sense to kind of keep an eye on this. But if you take a look at this, you're going to see that it's had a pretty strong upward trend. And that moving average crossover is right here. And this is what's so funny to me. I wonder what type of entry people were using to get in. What was wrong with the moving average crossover there? What was wrong with the hold entry right there? What was wrong with the hold entry right there? What was wrong with the stock tippy-toeing all over the 10-period moving average in the last 4 days? The answer is nothing. So it's not different entries, but people are just trading what they see. Now, let's say the investor said, okay, James, I want to try to ride the trend to the upside, but I'm not as positive as maybe some of those other investors. I want to maybe buy it, but maybe just do it with a covered call. Maybe I just don't have the high expectation that other people do. And I'm okay with tapping the upside because maybe if it went sideways, I try to capture some time decay. I've been waiting to say that for 30 minutes. Now, if we take a look at this, we're going to go to the trade tab, okay? Now, we know not all investors are option traders per se. They might like to try to buy the stock. That stock maybe has a dividend. We know the dividend, in this case, yield for 1.46. We know that actually it's a quarterly frequency. We know that they could actually cut the dividend, raise the dividend, all of the above. Now, the biggest actually thing is on this is this stock, when you look at it, the implied volatility is not as high as Hood, but the implied volatility is decent. When I say decent, so in my mind, when I think low implied volatility, 40 or so days after expiration, I think implied volatility 15 to 24. When I actually think medium implied volatility, I actually think, let's say 25 to 34. When I think, let's say a high implied volatility, I'm actually thinking 35 plus. Now, where did you get those numbers? We've been talking about that for probably 15, 20 years, okay? That's kind of the basket we kind of think of it in. Let me repeat, 15 to 24. Now, by the way, which expiration do you look at? The monthly expiration, the closest to 40 days. Okay, so I said 15 to 24, low, 25 to 34, medium, 35 plus, high. So if I went to the 17th October with 36 days left and the implied volatility is 31, I'm kind of thinking this is kind of more medium. What are we probably going to find? Now, if I look at, let's say, buying the shares at, say, 76 bucks, and the investor, let's say, sells the 80, well, we know on this covered call example, from 76.64 to 80, that's $3.36. Plus, okay, it's also, so the 336 is the stock appreciation. If the investor sold the 80, but you also got to say if the investor is going to agree to sell the shares from now to expiration, they're also getting the premium. Now, if that investor got the bid, which is 157, stock appreciation, 336, 157 option premium, grand total, pre-commission for the option, 493. 493 on an investment of $76, that's like 6.5%, 6.4. Let's round down, okay? Now, many investors over a 36-day period, they might be interested in that. So this kind of gives, now, by the way, if the investor was able, if the stock, let's say, doesn't close above, and I'm saying at expiration, the stock is not 80. The shares were not assigned to somebody else. The investor got to keep the shares and they got to keep the premium. Some investors like that because they get an option premium to help theoretically reduce the average price of the stock, and maybe they also got a little dividend yield. Now, I wonder if the stock went up $1 or $2 higher. Could they get a $1 or $2 up move, potentially even small? Could they get the option? Could they get the option premium and the dividend? My gosh, it sounds like triple whammy. Now, the answer could be yes in that scenario. If the stock went down, you actually got the option premium to help lower the average price of the stock theoretically, and the dividend. So really the dividend and the option premium are trying to reduce the average price of the stock theoretically, okay? Now, what I'm going to do in this case is we're going to right-click on that 159. We're going to go to buy, and then what we're going to do in this case, covered stock. Now, I have to say I'm guilty, okay? I haven't done a whole lot of covered stocks. Why? Well, you're capping the upside in the shorter term, okay? And so many of our examples have really been kind of more vertical-based, if you will. But I don't want you to think that covered calls are bad. I don't teach on covered calls in terms of a class. Cameron does, things like that. But let's say the investor said, James, I want to be in that type of trade, and then I want to also set an up and exit. And that exit might be, let's say, based upon, let's say, a support level. That if we go below, let's say I set a stop at, let's say, 67. That if we went below 67, I want to get out of the trade, the investor says. Now, James, could you also kind of just say, I'm going to set an exit based upon the moving averages changing color? Yeah, you could. Okay, but you got to understand a covered call, you are trying to kind of capture that time decay, and you are a little bit buffered by selling the call. Okay, now you don't have max loss to the downside outside zero, but the option premium does provide a little bit of a protection. I stress little bit. Okay. It's not like buying a put. The put gives you the right to sell, okay? Defines the risk. This is an income strategy. It's not protection. So trade number 2 here, we're going to look at GLW. Now, by the way, when you look at GLW, another stock that maybe some investors might be thinking about is they might be thinking about Generac, GNRC. Now, I'll pull that up in just a moment. This is saying if this stock actually goes to 67 or less, sell it. Now, it's not just selling the shares. It's buying the callback, then selling the shares. All right, save, confirm and send. Classic covered call on that example. Okay. Now note the commission is on selling the option. Okay. Now I'm going to kind of take, in the last 5 minutes, we're going to kind of fast fire a couple of stocks. GNRC. Now, sometimes investors will say comments like, man, I really like to buy on a pullback. Okay. Well, where are you talking about? Well, remember, we want to kind of count to 3. Well, on the right-hand side, we can see the green line. I mean, we can all see that. Now, remember, when there's red right there, it's really saying, some investors are saying, I'm going to stay back and not touch it. I'm going to let those bears attack that stock and push it lower. Now, we know that, for example, there's one. If we actually go to the very next day, there's start of 2, the moving average is crossing. If we go to the very next day, we can see uno. I need you to say this with me. Uno, dos, tres. Okay. Eins, zwei, drei. Okay. I don't know French. Help me out here. So now, in our examples going forward, when we talk about entry number 1, entry number 3, and so on, we're going to show the example of buying on step 2, on the entries and the exits, so we can kind of practice and drill something down. Now, in this example, now the investor is saying, hey, you know, we actually got uno, dos, tres. Now, okay, I missed it. Dadgum, I missed it. Well, yesterday, what we're going to notice on a little GNRC, we actually do see a little hold after just 1 day down. Notice where the intraday low was, tippy-toeing all over that 10-period moving average. Somebody is watching that 10-period moving average. Now, we take a quick peek at this. It just went right down to the 10-period moving average again. Don't tell us that actually no one's watching it. If you don't think that, no wonder you struggle buying close to support. That's why people use buy limit orders. They're saying, look, if we come down to that area, buy, right off that level. Does that guarantee the stock's going to go up? No. But some people say, look, I'm confident, I want to try to get in. And they set those orders right near the moving averages, thinking it could go up. That doesn't mean they don't set a stop. They're testing to see if that moving average becomes support. Now, what we're going to do in this case is, let's say the investor says, let's go to the trade tab. Does this have liquid options? Liquid? I mean, 40 cents wide in the bid-ask spread right there. 3 contracts in the total world today, 97 total. I mean, we wouldn't say this is unbelievable. If we actually take a look at the 185, 33 delta, you got a 480 bid-ask spread, 92 contracts. That's 2 contracts in the entire world. Now, in this example, what we're going to do is we're going to right-click right there, sell. But I want you to note something. If that liquidity, now, by the way, the liquidity is currently. That doesn't mean future liquidity. That can change, okay? What we're going to do in this case is we're going to try to sell the 185, and then what we're going to do is say, look, what may be option? And we're going to even maybe spread this out like the 160. This is kind of the problem, and I'm going to maybe do the 165. When you kind of look at stocks that just don't have millions of shares traded on the stock, then you go look at the options and say they're not very liquid. I know you're looking at a stock that's not very liquid. So what that means is if you want to try to get in and out of something, it's probably harder to get fills. So that's why most of our examples are not looking at stocks that have 600,000 average current volume or average volume. We're looking for millions. So if you did want to consider options, you have a better chance. Not 100%, but trying to get a better chance, okay? Now, we're going to sell the 185, trade number 3, sell the 185, buy the 165. This is a vertical spread, wider, okay? But we would kind of say it's more like a cash that could put it with the downside protection, okay? Now, what I'm going to do here in closing, couple stocks that we're just going to kind of keep an eye on, okay? One of those stocks, I'll fast fire 30 seconds, EMR. EMR, if someone kind of likes a little basing pattern, little EMR is trying to get a little reversal here. Kind of reminds us of the UNH example, okay, as well. So EMR, that's one we're going to watch. The other one we're going to kind of keep an eye on is Norwegian Cruise Lines. We talked about that. RCL, Royal Caribbean is lagging, but the CCL, so the NCLH and the CCL, those are the ones that are getting a little bit stronger push. The key word is right now. We're also going to keep an eye on Tesla. We've been watching this over the last couple of days. Could we finally get through an area of resistance? And what you're now going to notice is a little Tesla getting a little push. We would also include Dash in there and Palantir. And Palantir has a red candle after a little breakout. Some investors might be really watching that for a hold setup. Keep an eye on that. I'm out of my time here today. I'm saddened by that, okay? Now remember, with what we discussed, it was done for example, illustrative purposes only. You can subscribe to the Trader Talks channel right on YouTube. Follow all of our content outside ETFs. Tomorrow I'll actually teach ETFs in the morning, 9:30. Join me live. It's live only. Join us, 9:30. You have an appointment, cancel it. Tell them you're actually going to go to the ETF class instead, okay? Reschedule. So remember, with what we discuss is done for example, illustrative purposes only. Stay tuned for our next class coming up right at the top of the hour. I'll see you back on ETFs tomorrow morning at 9:30 a.m. sharp, okay? Live only, and we'll talk about some of the things we're seeing, not just in domestic, but international markets. With that said, thanks so much. Take care. And what trends are you riding?